Welcome back. Let's focus on one particular company now, Siemens. It tells CNBC TV18 that their India order book has shown terrific growth in the last 5 years, and India is their fastest growing market globally. On the sidelines of Hannover Messe 2024 in Germany, Yash Jain caught up with Sunil Mathur, who's the MD and CEO of Siemens India, to discuss their business outlook, and began by asking him where is the India market positioned for Siemens globally. Listen in.
Well, India is the fastest growing market for Siemens globally. So that's a very clear statement. There is a lot of focus of the global board and our CEO on India very clearly for various reasons. One is the last 5 years have been a proof point of what India can actually do. The growth of India, the investment in infrastructure has actually kicked off a lot of ancillary production coming in. And that has become hugely interesting to the global organization here. So I do see the next 5 years as being a step up in private capex, which is what interests us straight away, right? We've had a first start of infrastructure, which is the foundation.
Correct.
That will continue. But then on that now, slowly private capex will start kicking in.
Okay.
And it has started kicking in. It takes time, but it will start kicking in. And when that comes in, we will need to adopt it much faster. The only way to adopt it is digitalization and technology. And that's where Siemens is right at the heart of it.
Correct. You cued me to my next question as well. Right now, it's largely the government in India which is doing the capex, which is also getting you a great amount of orders. Once the private capex also starts kicking in that context, what I want to understand is FY25 right now, FY24 as we end, where does your order book stand that you have at Siemens India over the next 2 to 3 years, or maybe 5 years, consecutively year after year? What is your estimation in terms of growth of order book in terms of numbers?
So I won't guide over there, but I think our track record in the last 5 years has shown a terrific growth. We want to exceed that growth in the next 5 years. We don't see any reason why it cannot be much faster than what it has been in the last 5 years. We've had large orders coming in. We got the €3 billion, 30,000 crore order for locomotives. The railways is now picking up on rolling stock. Vande Bharats are coming in. Train signaling systems are coming in, etc. There's a huge potential on the rolling stock side over there. There's a huge potential on industrialization as private capex kicks in over there. There's a huge potential on smart infrastructure and the energy transition as well. As the country moves much more towards renewables, the entire network will have to be upgraded to take care of the frequency matches over there. The entire discoms will need to be looked at as well. So that is the extent of the opportunity that India has. And I believe the next 5 years all of this will kick in.
Okay. In that case, I mean, is it possible to see the order book also doubling over the next 5 years as you see the kind of growth which is sort of coming? Is that sort of
I don't see a reason why not.
Okay.
I don't see a reason why not. A lot of it depends on the mix of orders, of course.
Correct.
You know, you get one large project order and then you jump up. The next year you may not get a large project, but you grow on the base business. But I would like to definitely believe that both our base business as well as the mega orders will definitely increase.
Just like we saw in FY24, FY25 as well, any large order to the size of what we saw in the previous year expected?
We are bidding. We are bidding for a lot of projects, both on the railway side, on
Any
metros.
number, how much are you bidding for? I mean, as far as...
No, I don't have it offhand.
Okay.
But I think it is important to say the moment you start, a large order could be a large railway order on the one hand, but then you have got large orders which are much smaller in size for digitalization, software business, or smart infrastructure. All our factories are full, which is a great indication. We're full for the next couple of years. We're expanding capacities. So that's a very, very good indication.
Of course, you're growing the order book, but what has been the margin trend out of the order book that you derive year after year?
I think our endeavor is very clear. We don't only want to grow the top line, we want to grow the bottom line as well. And we've changed the mix. We had a large number of project orders. We're now balancing those with a lot of short supply orders as well, where the margins are better. There's a lot of vagaries of supply chains involved over there that we are having to deal with, but the endeavor definitely is to grow the margin.
How big of an opportunity could railway be? Where does it stand out of your mix today? And how could that change in favor of railways, let's say, in the next 2 to 3 years?
So mobility, railway business for us is very, very large, and it's a growth market without a doubt. For many years, there was not too much happening. And in the last 3 years, I think we have seen a substantial pickup in the tendering activities over there. And it starts with the signaling side, electrification. We are almost 97, 98% electrified as a country. So that's going to continue as the network expands. But signaling is a huge opportunity over there. We have to upgrade the signaling network. The government is already working on that. But of course, getting the tracks up done, getting the rolling stock up to speed, increasing the weight-bearing capacity of cargo trains, as well as the speed of the cargo trains, is a major area of focus for the railways. And I think those are all areas of business that we are very much interested in.
India is, of course, a market which is looking very aggressively at electric vehicle industry. For you, of course, you have certain partnerships, but that is still on the commercial vehicle side. A large section of that market is also passenger vehicle. What is your view? Would you look at aggressively making partnerships on the passenger vehicle side also?
We've started out on the commercial vehicle side because we believe that's a market that is there and that is real and that is growing. We acquired a company. We are using the technology of that company, scaling it up, and that's already gaining great traction. We will look at the passenger area. We are looking at partnerships. We are looking at acquisitions in all areas, not only in e-vehicles, but in all the areas that we do business in. So M&A will play a central role to our strategy.
There was an important and a large exit also which was made, and which sort of the company shifted into the parent. Could we see more streamlining of businesses, if I could call it that way, where certain exits would be made, maybe to the parent company or to somewhere else, where business is more efficient and you come out of businesses which are not required in the coming year?
Well, I think if you look at the history, we have taken out a lot of businesses. We've acquired a couple of businesses as well. But this has all been in line with the global strategy, right? When they have taken out something globally, we've done it locally. And we have done it also because it makes sense over here. If the focus has to shift to move up the value chain, then a lot of the businesses that do not follow that strategy need to fall by the side.
Absolutely.
And that's a continuous process that the parent company follows and that we will follow as well over here on a continuous basis.
Announcements
it's a very fast-changing
Any announcements
world.
in the next year in terms of exit?
Well, we will see. We will examine the environment overall.
Okay.
And look at what makes sense. But I can't say nothing will happen.
Okay.
At the same time, I can't confirm that will happen.